Hey guys, welcome to my channel. I'm about to bring to you a very important VIX75 price action strategy, which is based on demand and supply zones, guys. So this strategy is very amazing and that's given us, and as you can see from my charts, these are some example of demand and supply zones as I've indicated, right? So you are going to see how this strategy works perfectly, how you can combine these factors of demand and supply plus other price action, market structure and other price action aspects to able to get good trading setups. So normally in trading we'll always have what demand and supply zones are important key levels in the market, where we have traders putting their interest or where price has been rejected a couple of times, and when it happens, traders always put their interest, their pending orders and whatever in those type of zones, right? So we will have zones like this. You see price get rejected in some of the zones. Okay, you discover that when price comes and then it get rejected in one particular zone for more than one time, right? You notice rejection candles, all right? You notice rejection candles like candles with wicks and all of that. You see price move up and then it get rejected, all right? So we get rejected. Sometimes you see wicks of candles. You see candles with wicks like being rejected upwards, and then you see the price, it comes back and then it goes and it gets rejected in that zone. So, all right, so it creates what we call a supply zone. Now sometimes it moves down and then it gets rejected down, all right? So there are some zones down where price gets rejected, and those zones will tend to be what demand zones. Okay, and these demand zones, once price breaks through, all right, there are times where price usually breaks through these zones when you see the number of buy and sell orders, they are not more enough to continue moving in that channel. Like if price happens to because normally we'll have buy orders around here, a lot of buy orders that will have liquidity to move price up, and he will have a lot of sell orders here, but there will come a time where you no longer see these orders. All right, now you see that because the number of buy orders, for instance here, they are no longer enough to sustain. You see price breaks through, and when there's a lot of buy orders, you always see a lot of candlestick rejections. Okay, you see a lot of candlestick rejection. You see this kind of doji candles around these zones here. You see in zones like this bearish engulfing candles, in zones like this you see bullish engulfing candles. So there will be rejection because the buyers and the sellers, they are in kind of conflicts. All right, so it creates demand and supply zones in the market. And now you see that when it happens that price happens to break, for instance, if price breaks this zone to the downside, you see that now it becomes a supply zone. Okay, this becomes a supply zone. Price comes back now to find rejection around the supply, and then it start moving. Okay, so when you move now, it creates what in another minor zone here. So this becomes a minor a supply zone. All right, sometimes price will come back to find rejection, and you see in a trending market it start moving. All right, so if it was in an uptrend, for instance, if it breaks up this zone, it will now come and rejects. Okay, if it happens to break through, it will come back to retest and continue, because now we have more buyers in. So the buyers are now in this zone, making the zone now become what a demand zone instead of supply zone. All right, so now if you go back to our chart, you realize that now we have what a VIX75 chart in front of us. Okay, so you see some zones where price has really been rejected around. Okay, and you see that once price get rejected more than once in a particular zone, it creates what we call demand and supply zone. Okay, so it creates either a demand or a supply zone. Okay, so there you can now use these confluences, you put them together, and then you make a trading decision. You can make a trading decision based on this, right? Now sometimes I usually use my trend lines and I just connect to know the trend of the market. Okay, so that mostly I like to trade with the trend, so that I should be looking for what sells. So I'll be looking more of what supply zones. I'll be paying more attention to supply zones, not demand zones, right? So for that reason, now once I connect my trend lines like this, all right, I already know that okay, I want to be looking for sell setups. And you know that whenever you see price rejects in a particular zone for a while, okay, for a couple of times, it becomes a demand and supply. Now if you look at this zone here, you can see we have rejection once, twice, thrice. Okay, so if you pick up your rectangle here, for instance, you are going to see that, okay, we have this zone here where price have been rejected a couple of times, right? So you can see it's so clear. It's so clear, as you can see right there, right? So you connect. Now you see that here we had what? We had rejections. Okay, we had rejection as price was coming down. Price got rejected here once, twice, thrice. It was finding it difficult to break through this zone here. We had more of buyers, right? So price moved up, came back again, got rejected a couple of times, all right, before it finally broke out of this zone. Now this was a demand zone at that moment. Okay, now you see that once price breaks through, it becomes what? A supply zone. You can see now that price came back now to retest the zone, and when it came back to retest the zone, we instead have what? A bearish engulfing candle. Now this bearish engulfing candle rejects down, was showing that this zone now is becoming a supply zone. Now we have sellers that are looking into instead selling and targeting lows, right? Now I want to show you how to combine confluences. Now you see that what happened? Price moved down, it came back. Now look at it. It got rejected around this zone here. When it get rejected around this zone, what happened? It had to move down, and then it came back again and retest, because now we already have what? A supply zone instead of demand. Price now finally broke out of it, and you can see those rejection, those bearish candles. Okay, those bearish candles. You see candlestick patterns here, like the evening star. You can see there, like you see this kind of candlestick patterns right there. Okay, now you see that what gave us this entry here is this. We had connected this trend line. Okay, this trend line where we connected the first week and the second week here, and then price now came back for the third time. Okay, it gave us double confluence of entry here, because this was a supply zone, and you can see that this supply zone coincided with this trend line. All right, it coincided with this trend line here, and what happened? It gave us what? An entry. So from there now you can combine this information now to take your sell order here, and then your target below. Now, why did I put my target here? I also did that based on what? Another demand zone. Okay, because that's important thing. People should pay attention on demand zones too, because sometimes price will find it difficult to break through some zone. So I came here now. If you look at this zone very well, you realize that there's been a particular kind of confluence here too, right? Price have not broke through this zone for a while. Okay, we had rejection here when price came, so it created what? This was a demand zone here. That is the reason why you see that when I enter my sell trade here, my target is around the demand, the next demand, which is this zone here. I hope you can see, you can get the point. All right, so here you can get maybe like a 1:5 risk to reward ratio. It's not bad. It's not bad. This is VIX75, guys. So if you get a 1:5, it's okay. So I remember I told you guys I was going to show you how to place your targets. Sometimes you should always identify these zones to place your targets, because if you go and you are we know very well that price could head right down to this lower trend line here, which are connected like a kind of a price channel. All right, but sometimes it's not good to be greedy. You just identify these demand supply zones and you take your trades. Now you see that we identify what this zone here that was a former demand zone that turned to supply, right? So it turned to supply now. We have had what? A confluence that combined with this trend line, and then our candlestick rejection candles here, right? We had this 3 pattern candlestick that caused us to take our sell orders, right? Now you see that price now took a very strong down move. Look very well here. You are going to see that we have what? Rejections here. Okay, now looking at this zone, we have another zone here. You can see we have this candlestick wicks here, where price have been rejected like once. It went up, it came again, it got rejected at the same zone. All right, you see rejection candles, and rejection candles. Okay, so you have to stretch it, right? You stretch it, and then from here you can see that when price came and broke down, it came up now, got rejected. So you saw this rejection candle, meaning that this demand suddenly turned to supply, right? Then we had liquidity grabs up here, all right, because normally the market makers will expect many people to be buying, to be selling here now, all right? So we had liquidity grab where price still close below the zone, but this supply zone still remain intact, all right, because it has already been rejected a couple of times. Okay, so now you can see that's the reason why you see that when you extend it, okay, if you extend it from here, you see that price now moved down. After it moved down, now it came back around the same supply zone. Okay, you can see this SS and mark was kind of supply, okay, and then it got rejected around the zone. You can see there. Now this rejection actually was still coincided with this trend line. So you see we connected this high, we connected this high, we connected high. So we have 1, 2, 3 touches, and then this is the 4th time. It coincides with what? This supply zone coincides with the candlestick and you see it gives a what, a beautiful kind of sell. Okay, so this is a good sell setup, as you can see right there. Right, so you see how you can combine your demand and supply zones and then other factors to get good entry setups. All right, so when you enter now, I actually entered this trade yesterday, but I exited around here. Okay, that's where I exited the trade, around here. All right, so you can see that from there now. Identifying this pattern here, I don't want to emphasize on these trend lines because we have talked much about that in this channel, and you see that we connected this channel, and then from there now price had to reject around this zone and move down. Okay, so if you look down here now, you see that we had what, another zone here, we had another rejection, which is like a demand zone here. Now you realize that here price came, got rejected once, got rejected twice. All right, but it would not have been a bad stuff if the TP was down here. Okay, it's okay for the TP to be down here because this is the next demand zone. All right, so you place your targets to based on the demand and the supply zones that are available. Okay, so you see that what happened now, price came and then got rejected a little bit around the zone here. Finally it came and broke out from the zone. Okay, some people could still take aggressive sell entries here when it breaks out. Okay, you can still take aggressive sell entry around here, and then you place your stop loss somewhere up, a little bit up, and then your target somewhere like that. Okay, that could have been an aggressive sell setup because this demand zone finally got broken. Now you see that what happened now, we already identified this demand zone here, and now you see that price has broken through. Price now could come back now to get rejected. So if it comes back and get rejected around the zone here, okay, we have our zone extended, right? So we have this rejection zone, this is a good demand zone here. Now we can equally have what, and a very good short opportunity again. And then from our short opportunities now, we now start to go and then we target bigger zones. All right, we can target this previous zone where price has been rejected. Okay, so you can take our sell and then we target this zone, this previous low, because this is the lowest zone where price has created for this main time. Now you see that if the price pulls back, then now it could give us what, another good entry setup based on this what demand. Now it has turned what, it has now turned supply zone. So now it's now a supply zone here. Okay, we have now a supply zone because price has broken through. Right, so that's basically it, guys. You can just identify your demand and supply zones by that, looking for rejections. Okay, you look for areas of confluences. You just combine your trading, your trend lines or any other confluence. Right, you can still take your trades only based on these demand supply zones, right? But sometimes you just try to increase the confluence so that you have what, high probability of winning the trade, right? So that's basically it, guys, how to identify demand and supply zone, how to combine with trend lines or maybe market structure or whatever, and still get good trading setups. So if this video add value to you, make sure that you subscribe to the channel by hitting on the subscribe button and notification bell so that whenever I post a new video, you are going to get notified. Thank you for watching and see you in the next video.